Cryptocurrency has blown a buzz lately, with the world entering into an era of digital currency. Cryptocurrency has come to light and triggered curious minds. Now that the world is aware of the negative aspect of crypto, many cryptocurrency exchange companies have been the target of multiple conflicts. One such platform that has long been in the controversy is Binance, the biggest Bitcoin exchange company in the world. Welcome to TechSpot. The name Binance is a combination of the words Bitcoin and finance. Founded by Changpeng Zhao in 2017, Binance is a cryptocurrency exchange that provides a platform for trading various cryptocurrencies. The company was initially based in China, but later moved its headquarters out of China due to its increasing regulation of cryptocurrency and is now operating in the Cayman Islands. Binance is currently the largest exchange in the world in terms of daily trading volume. It claims to maintain high standards of safety and security with multi-tier and multi-clustered architecture, and facilitates high liquidity in crypto-to-crypto trading in more than 500 cryptocurrencies and virtual tokens, charging minimal transaction fees. Like other crypto exchanges, Binance offers services around the trading, listing, fundraising, and delisting or withdrawal of cryptocurrencies, claiming to have the capacity of processing around 1.4 million orders per second. Cryptocurrency comprises of a decentralized, peer-to-peer payment network that is powered by its users with zero central authority or middlemen. The temptation of a cryptocurrency is that it can enable transactions between two individuals, simple and secure, without any intermediaries like banks and rule makers, offering two things that governments despise: anonymity and autonomy. That lack of central authority is the crucial reason governments are so worried about the cryptocurrency. It was a bit startling that India accepted the idea of cryptocurrencies for so long, but now the government is planning to instruct a fresh set of regulations that would limit Bitcoin and other cryptocurrencies. India is also all set to introduce its own digital currency, snatching quite a deal from crypto. Worth mentioning that it would not be a cryptocurrency if a government issues it. It is not only India. Governments across the world have started banning them. One of them is China. China and Bitcoin have had a strained relationship for years. In 2013, China restricted financial corporations from trading Bitcoin transactions. It had also outlawed fundraising through preliminary coin offerings and deterred domestic Bitcoin exchanges in 2017. The government has strengthened its crackdown on cryptocurrencies in recent months, thinking of putting an end to even their mining, which is extremely dangerous for the environment. While China has taken multiple steps to suppress the use of cryptocurrencies for years, the stress on mining is comparatively new. The presence of Chinese Vice Premier Liu and other high-ranking cabinet members aiming to further the intensity of crypto regulations, along with the previous efforts to broaden a clampdown on cryptocurrency. All of these pointers indicate that the Chinese government is getting more hostile about its approach. To know more about Bitcoin mining ban in China and the threat it poses to the environment, watch our video on Bitcoin's energy consumption problem. If you're enjoying this video, make sure to like and subscribe. American government's relationship with Bitcoin has included several headlines over the years, which is kind of surprising if we consider that the US government is one of the largest holders of Bitcoins. Cryptocurrency already poses a significant detection problem by facilitating illegal activity, broadly including tax evasion, the Treasury Department said in a release. Over a few months, a rising number of Wall Street analysts have set the buzz that regulators at the Treasury and the Securities and Exchange Commissions could soon take a more active role in cryptocurrency regulation. The Treasury Department, in May 2021, announced that it is taking steps to crack down on cryptocurrency markets and transactions. It might come as a surprise, but while other countries are on the verge of culminating Binance, El Salvador is going to offer $30 worth of Bitcoin to the adults when they download and register on the government's cryptocurrency app. President Nayib Bukele confirmed as he uncovered facts on how the nation would become the first to make Bitcoin a legal tender. Bukele also revealed the Bitcoin law in a national address that would come into effect on September 7th. Nobody will have to accept Bitcoins if they don't want to, Bukele said. That means when the law takes effect in September, accepting Bitcoin will be optional. The US dollar has been the official currency in El Salvador since 2001, which Bitcoin will join instead of replacing as a legal tender. In mid-June, the World Bank rejected the country's request to help it implement the crypto as a legal tender, illustrating risks to the environment and the possible scope of financial crimes. Finance Minister Alejandro Zelaya said the government will allocate $120 million to establish as many as 4 million starter Bitcoin accounts, or wallets. Do you think people would take the offer? In June 2020, Binance declared that it had bought a Financial Conduct Authority, FCA, regulated entity and would effectively utilize it to offer cryptocurrency trading services using pounds and euros, and the company was even set to launch its own digital asset marketplace in Britain. Binance had formed its UK subsidiary as part of its long-term efforts to become a registered cryptocurrency exchange in the country. The intention was to establish something similar to Binance US, a country-specific site that bows to local laws and regulations. It later turned out to be one of the many crypto firms that withdrew applications to register with the FCA for not being able to meet anti-money laundering provisions. The Financial Conduct Authority said in the statement on Saturday that Binance Markets Limited is not permitted to undertake any regulated activities in the UK. Though Binance Markets Limited is banned from offering regulated services in Britain, non-registered firms can still interact with UK consumers. That means Binance could still offer crypto trading, as the move would have no impact on people's ability to trade through its Binance.com website. Customers can still access the company's services through the website, which is not UK-based, and therefore falls out of the FCA's jurisdiction. But it must display a warning on its website, stating that it does not have permission from the regulator to operate in the UK. When it comes to Europe, Binance illustrated the significance of European markets to their offerings, and asked for regulators to open a conference to discuss the provisions crucial at local levels. The dialogue marks Binance's renewed efforts to collaborate with local and national regulators on the vital requirements to operate in these areas. The European region is a very important market for Binance, and it is taking proactive steps towards harmonizing crypto regulations, which is a positive sign for the industry, Binance tweeted. Binance will terminate offering futures and derivatives products to investors in some European countries, in the middle of developing crackdown by regulators, and has officially curtailed futures and derivatives product offerings across the European region, starting with Germany, Italy, and the Netherlands. The move implies that Binance users from these countries will not be able to unlock new features or derivative product accounts with intermediate effect. The leading cryptocurrency exchange continues to provide services to users, given the endless challenges it encounters from global regulators. Some cryptocurrency exchanges have played a safe game and operate within the regulatory framework. Others, like Binance, continue to fight for its room. We are certainly going to see heightened regulation in the near future, as the threats imposed by crypto will in the future urge the governments to either regulate it or abolish it completely. This could help the cryptocurrency industry by eliminating some issues and boosting consumer confidence. That's it for this video. Thanks for watching. See you guys in the next one.